Today, I want to teach you a strategy that gives you incredibly attractive rewards. This is our trade for today on gold on the 1 minute time frame. We had a setup, and after that we got a 3R reward, and then you can see the price just started moving. Stay with us until the end of the video. We'll walk you through step by step, explaining what these zones look like, what you need to do to make your zones more precise, and how you can trade based on them to get such attractive rewards or such a great risk to reward ratio from the market. Make sure to subscribe to the channel before we continue with the lesson so you don't miss out on future videos. Like the video, and let's get started with the lesson. Okay guys, you know that all the strategies you've learned, whether they're indicator based or not, it doesn't matter which indicator. Whether it's smart money, ICT, or price action, in ranging zones, their win rate drops. What does that mean? For example, let's say I bring up an indicator here, perhaps a commonly used technical indicator, and try to use it in a ranging market, which is a market that moves sideways without a clear trend. You can see quite clearly that it doesn't give me proper signals or reliable indications for making trading decisions. Look at how poorly it performs in this kind of environment where the price is not trending strongly in one direction. Or it doesn't really matter which indicator I use. Instead of, say, moving averages, if I use the RSI, which stands for Relative Strength Index, it's still not very appealing or effective in a range-bound market. Even though the RSI is generally considered to perform best in a ranging box, even if we try to use more advanced concepts like smart money or ICT strategies in ranges, like for example, they might say to find an order block here or there, you'll notice that the price just keeps bouncing up and down between support and resistance levels without giving clear entry or exit signals. If we first take the time to learn how to trade effectively in range boxes or accumulation boxes and really master this skill, we can much more easily achieve good, consistent income and positive results in the market over time. This particular strategy that I'm discussing is also specifically designed for trading within range boxes where the price is moving sideways. So, what's the very first point we need to focus on? The first point for drawing a range box is that if you find a range, make sure to draw a clean range for yourself. What does that mean? Don't just say this is my range box. Go and find the first and second touches. For example, let me bring the range box here. Okay, this is one touch, this is the second touch, and the price has ranged between these two. Go ahead and draw these. I'll also tell you how to draw it, and then don't update it anymore. That means if there's an outlier here or here or here, don't update it. The way to draw it is in the same time frame from your first shadow to the first body you see, whether it's here or here, it doesn't matter. Like this, look, I took it from this shadow to the first body I had here, and I draw it. So 2 points for drawing a range box. Find your first and second touches, and when you see the price has ranged, don't update it based on outliers. The second point is about how to actually draw the zones themselves. That is, how to draw support and resistance. I told you how to do it, from the shadow to the body. For example, let me find another example for you. Here I see a range box. For instance, look here. I see that the price has ranged here. You can recognize it. So I draw it from the shadow to the body. Here as well, I draw from the shadow to the body. See, I don't update it with this outlier. We want to move forward using these. We want to use these exact ones. Or, for example, if I see the price has ranged here, I don't draw my zone from the very top and the very bottom. That's not useful for me. The range has formed from here. I drew it up to the body, and here too it has ranged. These outliers, you see, we care about them. Look at how the price respects this zone. We pay attention to these outliers and the respect shown at the time of a breakout. Look, my friends, see how the price respects this. See how beautifully it has respected it and moved up. So first, to use this strategy, practice the range box well and make sure you know exactly how to draw it. If you've made it this far in the video and want to see the rest, please support us with a like, subscribe, and leave an awesome comment so you don't forget, dear friends. Your support is the only support we have. Again, here I see a range box. Look, I draw it from this shadow to this body and from this shadow to this body as well. See, I don't update it or move it higher. There's no point in doing that. I want to teach you how to trade with these outliers. Notice the respect here. I want to teach you to trade with these outliers. And again, See the respect. I want to work with these, so don't take this lightly, my friends. Now that you've learned how to draw the zones correctly and identify the range properly, keep these 2 points in mind. This is just theory, not practice. First, range boxes form more often in the market than trends do. Second, when a range box breaks, 80% of breakout attempts fail and reverse. What does that mean, friends? It means that if the price tries to break out here, it comes back inside. Here, it comes back inside again. From just this one point, you learn the first strategy. The second strategy, which you saw us trade with, you'll learn later in the video towards the end. Look here, I can, when the price is ranging, set up my box properly. See, from the shadow to the body, the price went up and came back inside. I can open a trade, set my stop behind the breakout, and go along with it for a reward of 2.5 or 3. Again, look here. I do the same thing. I hit my stop. Here, I do the same thing. I put my stop behind this. I hit my target. Here, I do the same thing. I hit my target. It's just that simple and sweet. Look, again here the same way. Now, let's continue and watch this together again. Look at this again. You just learned one rule, or you just learned a single rule. Look at this breakout again. How simple, attractive, and sweet this repetition and breakout is. Look, this is another entry, meaning if I bring this here again, it easily gives you your 2 or 3 targets. Look at this again. It came back inside from right here, formed a shadow, and went up again. Check these out. Let me draw it for you. How attractive, how truly beautiful, how wonderfully simple. Just take a moment to look at this again. Okay, that was the very first one. Now, what's the second one? Look, aren't you working with a limited breakout? You don't work with limited breakouts, you just keep catching the fake breaks of these range boxes. Look, here where I got stopped out, it was a fake break. You should only take the breakout when, after the breakout, the price can't return inside, does a so-called pullback, and then goes up. After the pullback, you can take a really good long position. Let's look at these range boxes again. See, if the breakout can't return inside and does a pullback and goes up, here it did a pullback and here we would have hit a stop. But again, just look at these two trades. What happened here? Did it break out? It did a pullback and went up. That's it. Simpler, sweeter, more attractive, better, with the highest win rate and the best R-bar. And these two little tricks, don't forget to subscribe. We really love you, dear friends. Check out the channel so you don't miss the rest of the videos. Wishing you all the best. Take care.